Welcome to the Market Recap, your weekly digest of the biggest market stories from the past week. Join host Anna Serin and financial expert Bruce Campbell as they go beyond the headlines to deliver cutting-edge insights into news that move the market. Proudly presented by the Canadian Securities Exchange.
Hi, my name's Anna Serin, and I'm Director of Listing Development with the Canadian Securities Exchange. You're joining us for yet another market recap on Friday, April 8th, 2022. I'm, of course, joined by my wonderful co-host, Bruce Campbell with Stonecastle Investment Management. Thank you for joining me, Bruce.
Yeah, it's been a while. Everyone else has been filling in for us.
We've had a few sub-ins, and they've done very well. So
They have, yes.
So we know we can take a sick day if we ever need to. I haven't talked to you in a little while. There's a lot going on in the markets. There's some fun stories. I always like a week with some fun stories. So we'll get right into it. We're going to start off with talking about rapid rise in rates. This is a conversation, Bruce, we've been having for a while, and I think we will continue to have. You're going to tell us what's going on there. We're going to talk about the Fed talking tough on inflation. Again, another topic I feel like we're going to be talking about for a little bit. There's a pullback in oil. You're going to tell us what's happening. And then, of course, we're going to get into the really fun story of Elon Musk and Twitter. This is a story we've also talked about a lot. It's just got a new twist and turn to it this week. And then, of course, we'll get into some CSE Issuer news. So let's start off. Rapid rise in rates. What is happening?
Yeah, I mean, this point in the second point with the Fed kind of go hand in hand. I mean, we've been experiencing this high rate of inflation. And as a result, the Fed now really wants to raise interest rates quickly to get a control of that. What their hope is that by raising interest rates, it'll slow things down just enough so that inflation starts to disappear, but the economy still continues to grow. And so what we've seen is that, everyone tracks the 10-year treasury in the US, and we've seen that yield go from around 80 basis points. You go back to the end of last year or the middle of last year, and now we're at 2.7%. So you've seen this fairly rapid rise. It's been historically one of the more rapid rises that we've seen, certainly in most of the generation that's investing now. But what we found interesting from the chart that we put up here is if you look at a 40-year trend line, we're just at that point where we could start to break out. And if you look at the high end of the trend line, doesn't mean that this is where it goes, but we go back to the 80s when rates were in the sort of 15-16% range versus the 2.7. Means it's a very tough environment for fixed income alternatives, because now you have this rising rate environment where there's competition for rising rate. At the same time, the Fed continues to talk fairly tough to try to get control of inflation. So if you remember, they've been buying back assets, both bonds and mortgage-backed securities, to the tune of about 100, and at the top they were doing about 120 billion per month. They're going to scale that back by 95 billion starting fairly soon here. So some of the liquidity has been removed out of the system, which is they're buying, and then at the same time, you're seeing them increase interest rates. And in sort of typical Fed fashion, that was coming out this week, and so they had one of their Fed officials speak earlier this week talking about how rates had to go up more rapidly than the market was expecting, and they do this just to try not to surprise the market too much by kind of their moves. So that's what we saw with rates.
And so just to remind our viewers, because this is something that's always happening, sometimes more than others, when we say cutting back on asset purchases, just to remind people, this is literally the government buying, bonds and T-bills in the market. So this is putting capital into the market, which is helping kind of stimulate it. So when they start cutting back on that, there's obviously a ripple effect, right?
That's right. It's providing liquidity, and they did this really during COVID to supply that liquidity to the market. So, if you hold a bond, they're willing to buy it back from you. And now you have cash, and you can take that cash and go invest it somewhere else, maybe another bond into the equity market, wherever you choose. But you effectively have liquidity. And so, they were doing it, quite a large fashion. 120 billion per month is a lot. And, they're going to be cutting that back. They've already scaled it back once, and they're going to continue to cut that back. It doesn't mean it's gone to zero at this point in time. they probably will at some point in time. And really what they're doing is they're kind of reloading their gun so that when they need it again, and they want to control inflation, but it's going to be this sort of balancing act that they have to tiptoe through, where they're trying to really engineer, what everyone refers to as a soft landing, where, the economy slows down but doesn't go into recession. It's probably more difficult for them to do than they think, because, or than we think, or that the market thinks, because the reality of the situation is they're using trailing numbers, and they have to kind of anticipate and lead what's actually happening. So it can be a bit of a challenge, and that's what equity markets are still concerned with, is that as rates go up, then we hit that recession. Recessions are difficult for companies because their earnings aren't as strong, and when the earnings aren't as strong, the share prices sell off, and it sort of creates that feedback loop.
Interesting. Well, they have a challenging time ahead of them. They have a lot of moving tides that are kind of beating up against each other. So there's a lot of work to be done there. What happened with oil this week? It's been a crazy year for oil. What happened this week?
Well, we've just seen, we saw oil pull back a bit here. It's below the $100 barrel mark now. And if you kind of look at where it peaked out around the $125 range, that's a pretty significant drop. We haven't seen the equity side of things really get hurt too much. The equities, most of the oil companies didn't really participate from that 100 to 125. It happened so rapidly, and it was really around, the invasion of Ukraine that most of that happened. And so the market didn't really fully price that in. I don't think most investors believed it was sustainable. And now it's below that $100 level. And, that will potentially help because, it takes away some of that inflation. I mean, the energy has been a big part of inflation, and that trickles down into food and, multiple other areas. So we have seen a bit of a pullback, and it really revolves around the Strategic Petroleum Reserve and other countries who are now talking about pumping more oil. The Strategic Petroleum Reserve in the U.S., where they have this massive store of oil, they're talking about delivering out 1 million barrels per day out of that. And so it's just providing more supply into the market, and the price is pulling back a little bit.
Great. Okay, let's talk about Elon Musk. I always love a week where we talk about Elon. We talk about him a lot. Now, this week, as most of you probably know, Elon Musk on Monday announced that he took a 9.2% stake in Twitter. And it cost him just chump change of $2.9 billion to take this position. Now, I don't know if this was discussed beforehand or after the fact, but it also got him a board seat on Twitter. Now, to give you some context, the founder and former CEO currently owns 2% of Twitter, and he owns 9.2%. So he's got a very large controlled position in the company. Once he announced this on Monday, the Twitter stock soared 27%. So it definitely had an interesting day itself. I just want to talk a little bit about the background, then I want to find out what you think about this. So Musk has had a rocky history with Twitter. And he's even condemned, the founders and CEOs and the people running Twitter for how they're kind of not allowing free speech. We know that Trump is not currently allowed on Twitter, and they're obviously doing their best to kind of withhold, speech that induces crime and hatred and that type of thing. So anyway, one of his big things is that when he joins the board is he wants to kind of liberate this free speech. But I just wanted to talk about his history with Twitter. He's utilized Twitter as his number one marketing tool for Tesla. And I thought this was really interesting. So and on his personal account, I think he has something like 80 million followers on Twitter. On his personal account, he advertises for Tesla. And I thought this was super interesting. In 2019, Hyundai spent $2,000 in advertising per vehicle sold. Elon spends 14 cents per vehicle he sells on advertising using Twitter as a platform. So just to give you some context of how he utilizes Twitter, also what we've seen when he wants to invest in something, we've seen him do it with Bitcoin, we've seen him do it with Dogecoin, and with other things that he goes and makes a move on Twitter, and then it kind of changes things within the stock. So he's got a really heavy seat on this platform that he now has a really heavy seat on. What do you think about this?
Well, from a wealth creation standpoint, it'll allow him to have access to free speech, right? Like they're going to have to take him off the board and probably take out his investment in order for them to mute him on Twitter. So he'll be able to say and do what he wants. And there's been lots of controversy in the past about, kind of how aggressive he's been, especially with, places like the SEC in the US. And, that should probably go, I would imagine, mostly unchecked, at least for a while, because of this investment and the board seat for sure. So, when you look at those advertising stats and really kind of how he uses the platform, it should allow him, to have more free reign and not have to worry about, ending up in a situation like Trump did.
Okay, so I have a few questions for you. First of all, he's not had a great relationship with the SEC, right?
Definitely not. No, he's called them some pretty mean things.
Okay, so the SEC is the US version of our regulators in Canada, and when he goes
with a lot bigger teeth.
With a lot bigger teeth, yes, much bigger than our Canadian guys, even though they're wonderful. So when he goes and does stuff like this, it gets him pretty angry because it's interesting. We're in this world with social media where somebody can just go and say something and it changes the stock price, right? I mean, it's a different way that they're going to have to regulate these types of moves. But the other question I have for you is I don't know if Twitter necessarily would be an amazing investment. So to invest $2.9 billion in it, I mean, he's all about innovation. This is just a social media platform. Do you think when he chooses investments just because he knows that when he makes the investment, it'll make the stock go up?
Perhaps, certainly there was a lot of speculation with that around with Bitcoin and, them accepting Bitcoin and not accepting Bitcoin and his investments in Bitcoin. So it certainly wouldn't surprise me that if he was doing it to help out, but also he's a pretty visionary guy, like him or hate him, and this is the platform he chooses to use, and he's with his 80 million followers, he's able to deliver messages, and it would be even bigger than that because there's people that follow that don't follow him but that somebody else follows, and if they retweet or like a tweet, then it ends up in other people's boxes as well. So his following is much bigger than that, and especially when he says something controversial or has something interesting, those get disseminated even further than that 80 million.
It almost seems to me like Elon Musk is a bigger brand than Tesla. That Tesla rides on the coattails of Elon Musk's branding.
Well, certainly, it's not his first rodeo, right? I mean, he's done other things, and as a result, he is a visionary, and he thinks differently than I think most people do, and sees a lot bigger ideas than most of us do. Some of them are really crazy, but some of them are fantastic. And when he started Tesla, I mean, most people wouldn't have guessed that they would have had the success and certainly have the cachet and cult following that they do, for sure.
Totally. Well, Elon, we're watching.
The whole world is, yeah. Including probably the SEC with a really scrutinizing
Well, he
eye.
doesn't do it privately behind, some big boardroom closed doors. He does it right out in front of everyone. So anyway, I'm sure they're clamoring right now. Okay, let's talk about CSE Issuer news. There's been lots going on. The one thing I wanted to talk about today was one of our mining issuers. We're entering the season of mining. Now, typically, the CSE enters the season of mining in the cold winter days, but because of the pandemic, we now have our big mining show in Vancouver in May and our big mining show in Toronto in June. So I'm super excited about our mining season this year, that we're not in slush and rain. But we've seen quite a big movement in the mining sector, which is pretty exciting. We've seen lots of mining issuers come to the CSE. We've seen lots of money raised in the sector, which is always really exciting. We had one of our issuers, we've had this issuer for a long time, Bunker Hill Mining. They secured an equity investment of $14.9 million, which will be used to restart and develop their Bunker mine, which is in Idaho. and their main focus is silver. So really, I just kind of wanted to ask you what your thoughts are on the mining sector in whole. I mean, congratulations, Bunker Hill. That's a huge feat when these companies can raise that kind of money. I feel like we don't bat an eye when a cannabis company raises 14.9 million, but it's pretty great to see these issuers raise that kind of money. What are you thinking about the mining sector?
Yeah, I mean, it's definitely an interesting sector. I mean, right now we have this strong inflation trend, and in the past we've shown some of our thoughts on the emergence between Canada and the US as far as markets go, and a lot of that has to do around with mining and energy. And so both those sectors, and mining in particular, seem to have a tailwind here right now. They have higher commodity prices, and there's an interest in people investing. It's been an underinvested sector for a number of years because it was so out of favor that now, there's a lot of projects that are out there that have, just been kind of shelved while the capital markets needed to improve for their sector before they came to the market and were able to raise money and develop these projects. And this is, just another example of that.
Yeah, absolutely. Well, I'm excited for the mining sector to have a day in the light. Bruce, what should we think about going into next week?
Well, probably the biggest thing that most macro investors have on their eye or on their mind is inflation numbers, and that's going to come out on Tuesday. And last month we saw again another fairly significant rise in inflation, and so we'll have to watch and see what happens with the latest month and where that is. The comparable numbers from a year ago are quite low, so we are expecting that you would see a rise in inflation on an annual basis. I have seen some economists who are forecasting now that they think that this should be probably the top, and that moving into April, May, June, we should start to see things subside a bit. But we certainly haven't seen that. If you're buying anything out in the marketplace, it seems like food, energy, gasoline, restaurants, it all seems to be more expensive than it was 6 months or a year ago for sure.
I started kind of getting into the capital markets. I think I was 20 or 21, and you start doing all the brokerage licenses and you do all that studying and you learn about kind of economy and inflation. Inflation kind of was this arbitrary thing. And I think the estimate was 1.5% a year is kind of what you estimate as inflation. This is the first time in my life where inflation, it's a bit of a scary thing, because I think, what are we at right now? 7.6?
Yeah.
About there. I mean, that's scary. 7.6% on top of everything that we do in life is a scary number. So I really hope that we're going to come to the end of it.
Well, we won't come to the very end of it, because that's, inflation is sort of an important component of the way our economy has now been set up, that we need some of that inflation, but we just don't want the hyperinflation, because it really hurts, and it really hurts because most incomes can't keep up to the rate of inflation. Most people haven't got a 7 or 8% wage increase over the last year. Wages have been going up, but they haven't, they're not going up necessarily to that degree. So it means that your purchasing power is getting eaten away because of the costs of everything that are out there.
It is. Yeah, it is. It's tough. Well, listen, Bruce, I've missed you. I'm so glad we got to sit down and chat today, and I will be seeing you next week. So thank you so much, and have a great weekend.
Sounds good. Thanks. You too.